The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.
We've got a jam-packed week, especially for currency markets. So to help me look through it all, Duncan Cooper joins me from ACY Securities. Duncan, great to see you there. Really appreciate it. Central banks galore, I think it'd be fair to say, and all eyes on the US dollar. What are you looking at when it comes to the technicals of the US dollar index?
We've got the weekly chart here. And of course, if we just run through the information coming out, tonight we've got the US CPI data. Tomorrow night we've got the PPI data. Thursday early morning we've got their interest rate decision where we're expecting no change. And then later in Thursday we've got retail sales, Empire State Manufacturing. So all this data is coming out. Now on the weekly chart here, when we last spoke, I was thinking we may be moving up to the top of the range there at 105.69, but over the last 2 weeks we've just been having a little bit of a pause. And unfortunately for traders at the moment, we're in the middle of the range. And with all this data coming out, there's the obvious question, do you trade at the moment or do you wait for all the data to come out and then make a decision? So why don't we drop it down to the day chart of the dollar index and maybe we can have a clearer look at what's happening there. So on the day chart, I've drawn a fib across the range there. That's actually last month's range. So for the whole month of May, we traded up. And the last couple of weeks, we've just been trading down. So nobody really knows where price will be when we get the data released tonight for CPI. We may move up, we may move down. From having a very strong month up in May, I'm anticipating we could, follow on and through. We'll just have to wait and see what the data brings. But if we do dip down, I'm watching the dollar index at 102.35. We've got day support there and a 62% retracement. So we might have a bit more of a deeper dip down within the range of May, and then can we continue up in the month of June? That's what I'm focusing on. We'll just have to wait and see. As I say, we're in the middle of the range, and as you know, we've got all this data coming out. What's your thoughts on the data? Is it going to be positive for the US this week or negative?
Well, I suppose given the fact we've seen so much of, rate hikes, or the odds of rate hikes being priced out from the Fed this week, an upside surprise to CPI could potentially see that shift a little bit, maybe push the dollar higher. Conversely, hey, if it's a weak print, that means that the Fed potentially could stay on hold, and that could be dollar negative. As you said, it's going to really depend on those releases. But let's move on to the Euro USD, because not only do we have to worry about the US dollar, the greenback side of the equation when it comes to this pair, but the ECB is also deciding policy this week. So what are we looking at here when it comes to the major Euro USD pair?
That's right. We've got the ECB on Thursday. We're expecting a 25 basis point rise up to 4%. So, the interest rate differential still favors the US side, even if we don't get a US rate rise. And we had a heavy sell-off in May. But technically, if we just look at high tops and bottoms, we are still in an uptrend here on the weekly. And technically, we pull back to a monthly low that formed in 2020. 106.35, and we're just having a couple of weeks of a bounce here. It's not a very large bounce at the moment, so in my mind it's uncertain at the moment because of the massive sell-off we had in May. Of course, interest rates and the decision process will determine, are we putting in a longer term bottom here to move up to 110.33, or are we going to follow through and down? So these are the levels to watch. Are we going to move down and test 106.35 this week, or heading up higher towards 110.33? And on the day chart there, I've got a couple other levels to watch out for. Personally, at the moment, I'm just sitting on the sidelines until we get the data release coming out. But if we do get a much higher move up, around the 10900 level, 109.09 to 16, we've got day resistance and a 62% retracement of last month's drop. So I'm still favouring maybe a further decline. If I'm correct, I did read from one of our economists at ACY here that the Eurozone has technically gone into recession, I believe. I don't know whether you can confirm that, but growth is definitely very low. Interest rates are lower on the Euro side than the US side, so maybe favouring a downside move longer term, but I'm looking for a higher level if we can for an opportunity to sell there.
Yeah, indeed. And no, I do know Germany has gone into recession. As far as the broader Eurozone, well, Germany is, of course, Europe's biggest economy, so I wouldn't be surprised if it were a recessionary environment for the broader bloc as well. But nevertheless, growth conditions potentially weak, but the ECB still having to hike further from here to constrain inflationary pressures. Let's move on now to another pair, one that was certainly in the crosshairs last week because, well, the Bank of Canada decided that it no longer wanted to stay on the sidelines. It hiked rates once again. And, well, outside of a fairly subdued move on the weekly, it still seems fairly range-bound here for the loonie. So tell me what you're seeing and the key levels to watch for the USDCAD.
Well, the key level to watch at the moment is on the weekly chart here is this range, 133.14 down to 01. As you said, interest rates were on pause from Canada, but they did surprisingly raise interest rates to 4.75%. So the interest rate differential still favours the US side, very much range bound here. So very broad range down the weekly chart. Are we going to hold at the bottom of the range? So, if we just drop into the daily chart and have a closer look, what we'll definitely see is over the last, I think it's 4 trading days now, we have been testing and holding at the bottom of the range. And the last 2 trading days, we've traded down at 133.14. So are we reversing back up to the top of the range? Broad range. If it's in a range, you have to trade it like it's a range. I don't like to sell into support. So after the CPI data tonight, we might get a further dip down to the 133.14 level. And if you're prepared to stay up tonight late, you might see the opportunity for a further bounce back up from the bottom of the range. And are we going to be trading all the way back up to the top of the range? Later in the week, if the FOMC surprises with an interest rate hike, or at least opens the door for further hikes, we may then see a move all the way back up to the top of the range. And it's quite a broad range there for traders, so we'll have to wait and see.
Yeah, and certainly there are folks out there that prefer ranges when they are trading. So eat your heart out if you are a range trader. Last but not least, we do have to talk about the Aussie USD because, well, another central bank that lifted rates, perhaps somewhat surprisingly last week, was the RBA, playing catch up perhaps with the rest of the world. So what do you see here when it comes to the Aussie USD? A potential for a further push higher?
Well, maybe. When we last spoke, we were right at the bottom, and we've had a very hawkish move from the RBA, and of course, press conference, from the governor, very hawkish. But when we had a raise in May, we run up to the top of the range there at about the 68 level, and of course, we're running back up to that level. So the question will be, we traded 2 pips above 67.71 yesterday. Are we going to stall at the top of the range, or are we going to move up and through? So, of course, the data this week from the US is probably going to determine that. Of course, on Thursday, we got the job figures as well. And from memory, the RBA is saying, if our unemployment rate starts to tick up, that will be one of the things that will start to confirm maybe that inflation is getting under control, and they might not have to raise interest rates anymore. So Thursday, we've got the job figures at 11:30. We've also got China industrial production figures coming out. So up at the top of the range there, 68.05 to 18. What will price do up there? Are we going to now form maybe a triple top area, or are we moving up and through? So that's the level to watch for traders as we head through the week. Are we holding up there?
Indeed.
What's your thoughts?
Well, I think it's going to be a very interesting and entertaining week, and I dare say, if not the biggest week, one of the biggest weeks for FX markets, just with the deluge of central banks. But, well, we'll wait and see, and we're going to check back in a fortnight's time to see how it's all unfolded. But Duncan, thank you so much for kicking off the week for us on the trade. Duncan Cooper there from ACY Securities.
Thanks, Kyle. Pleasure.